Microsoft added $260 billion overnight. Meta lost 8% the same evening, and both of them beat on revenue. Plus 4 more stories moving the AI tape. Let's get into it. Microsoft posted $90 billion in revenue, up 18%, and Azure crossed $100 billion in annual revenue for the first time, growing 41%. CFO Amy Hood then guided next quarter to 45% constant currency growth against a 41.4 consensus, while cutting the CapEx guide to roughly $175 billion from $190. Meta also beat on revenue, up 28%, but missed hard on earnings, raised the floor of its CapEx range, and watched free cash flow collapse to $784 million. Both grew. Only one is converting. That is the cleanest read yet on how this market prices AI spending. Not in the abstract, but against the revenue it visibly buys. The bear case, Microsoft's CapEx cut, is partly an accounting reclassification, not a real reduction, and it still spent $41 billion in a single quarter. The signal is tonight. If Amazon raises CapEx and the stock holds, the Microsoft template survives. If Amazon gets Meta's treatment, the discriminator is the spending line, not cloud growth. Samsung used its earnings call to attack the China memory panic head-on, telling investors the 2027 shortage will deepen versus this year and run into 2028 because it takes more than 3 years to build fab capacity and ship wafers. HBM4 revenue is guided to more than triple quarter-over-quarter and to exceed 60% of total HBM revenue in the second half. The reaction was violent. Samsung closed up nearly 8%, SK Hynix reversed an 8% intraday loss, and the Kospi rebounded more than 5% after 2 consecutive circuit breaker sessions. That reframes the China commodity DRAM scare as a 2029 problem, not a 2027 one. The bear case is simple. This is the supplier talking its own book. The incumbent with the most to lose from a glut is the one telling you supply cannot not arrive. The next read is Apple's gross margin tonight. If margins hold against memory price hikes, the pain stays contained. If Apple flags memory costs in guidance, Samsung's thesis just became everyone else's cost problem. The Federal Reserve voted 9-3 to hold rates at 3.5% to 3.75%, the 5th consecutive hold, with 3 regional presidents dissenting. Then the bond market overruled it. The 30-year Treasury jumped 11 basis points to roughly 5.23%, the highest since 2007, and it has now traded above 5% for 30 straight days. Markets are pricing 2 rate hikes this year, not cuts. Here is the AI transmission. The same hyperscaler CapEx defended on last night's earnings calls is financed in the corporate bond market, and that issuance flood is now explicitly named as a driver of long-dated yields. Microsoft's $175 billion and Meta's $140 are partly debt. The counter case is that equities shrugged, with NASDAQ futures up 1.4%. As long as AI revenue compounds faster than the discount rate, duration risk stays theoretical. June PCE lands today. A hot print pushes the 30-year through 5.25, and the highest multiple AI names lead the drawdown. Amazon and Apple both report after today's close, into a market that just showed exactly what it rewards. Amazon is modeled at roughly $196 billion in revenue, with AWS at about $40.5 billion, up 31%, the division's fastest growth in 15 quarters. Tracked CapEx consensus has crept to $207 billion and is widely expected to be raised again. Apple is expected to earn $1.89, and the entire focus is gross margin against memory chip price hikes. These two sit on opposite sides of the same shortage. Samsung just extended to 2028. Amazon sells the compute. Apple pays for the memory. The bear case. Amazon is raising spending into a tape that punished Meta for precisely that, so AWS growth has to carry the whole print alone. The signal is AWS above 31%, with CapEx above $210 billion. If the stock still holds on that combination, CapEx is forgiven whenever it converts. Anthropic's unreleased Claude Mythos model produced two original cryptanalytic results that human experts had missed for years. On Hawk, a NIST post-quantum signature candidate, it found a lattice symmetry that drops smallest key recovery from 2 to the 64th operations to 2 to the 38th, effectively halving key strength. On AES, it invented its own technique, which it named the Mobius bridge, running 200 to 800 times faster than the record cryptographers set in 2013. The cost was about 60 hours and roughly $100,000 of compute. Two human researchers needed nearly a month just to verify it. This is not a cryptography story. It is priced, reproducible evidence that frontier models generate original results where verification is objective, which is the same research thesis Microsoft's Azure number monetizes. The bear case, neither result touches deployed systems, and no top-tier business outlet has picked it up. The next read is NIST. A formal parameter revision on Hawk is independent validation. Silence keeps it a lab artifact ahead of an October IPO. One through line today. The market has stopped paying for spending and started paying for conversion. Microsoft converted, Meta didn't. Samsung says the memory bill runs to 2028, and the bond market is repricing all of it. Subscribe for the full briefing every weekday. This has been the Daily Alpha.